Thank you all for choosing our session. I promise it's going to be a very exciting one, and I know it's late in the day, but don't worry, there will be pictures. So our session's on spatial finance, which is a new area, and a few years ago, the Oxford University Smith School set up the Spatial Finance Initiative, which was really sort of aimed to start to unlock the potential of using satellite imagery and geospatial data in the financial context. And one area of application that they identified quite early on is the application to sustainable finance. So I'm going to keep my intro fairly short. I'm Beth Burks. I'm from S&P Ratings. I work on the sustainable finance team. My research focus has been in particular on spatial, using spatial data sets, particularly in the water risk area. But I haven't had a lot of time for research recently because the sustainable debt markets have ramped up quite substantially, and part of my role is to provide sort of second-party opinions in those markets to ensure sort of market best practices are adhered to by any issuers. So that's kept me very busy. I have kept a keen eye out, though, for the application of satellite data in the sustainable debt markets, and suffice to say that it's still fairly absent, but there are some notable exceptions. So first off, SoftBank issued in their sustainable financing framework what they call the high-altitude telecoms for remote areas. So these are sort of in the stratosphere, enabling telecommunications to be provided to remote rural communities, and they saw that as addressing social issues. Another example, and I quite like Bob's topology here, so depending where you sit on the topology, you might have different views on this, but the beef producer JBS in Brazil have started, they released at least a sustainable finance framework where their intent is to potentially issue, where they link the bonds interest rates to performance targets around the amount of cattle that they're able to trace using satellite imagery coming from sort of farms that have no deforestation and are not subject to sort of social conditions that they deem intolerable. So they've yet to issue under that framework, but they released that in October 2021. So we're seeing some potential signalings that satellite data could be used. That's it from me. So with me, I've got a very esteemed panel. So we've got Laura García Veléz. She's a quant analyst at Lombard Odier Investment Management, working on the Sustainable Investment Research and Strategy team. She works on integrating GIS, so geographical information systems and metrics into investment strategies from a climate and nature perspective. Next up, we've got Irene Benito, who is a senior management in the European affairs for the company Planet, so a commercial satellite data company. She's held a number of previous positions in the Earth observation space and is a self-proclaimed evangelist for Earth observation. Next up down the row, we've got Kamil Kluza. He's the co-founder of a very exciting startup that's been going for a couple of years, just under, called Climate X. They're looking at climate risk ratings and potential losses at the asset level. His background is more from the risk management and treasury side at banks, which is quite interesting because he comes from more of the use case background. So we're going to hear from him. Next up down the line is Alex Money, who is one of the best names, I think, to be working in the finance space. I'm sure he's heard that joke before, but you'll forgive me there. More than 25 years of fund manager experience. He's now the founder and CEO of Oxford Earth Observation, and he's going to be talking to us about water risk, so a topic after my own heart, as you know. And finally, last but not least, is Adina Gillepsie, thank you very much. She's a head of Director of Business Development for Europe for GHGSat, who are a fantastic organization. She's going to tell us all about it. She also comes with more than 15 years in the Earth observation space, and also had the responsibility for the UK's contribution to the International Charter for Space and Major Disasters, which sounds pretty exciting and also a little bit terrifying. So, with that intro to our esteemed panel, each of them are going to present for about 5 minutes on what they do, because this is quite a new space, and it's, typically these guys speak to audiences that come from the Earth observation community, so we just want to give them a chance to introduce what they're doing, and then following that we'll have a short panel discussion and time for Q&A. So with that, over to Laura.
Thank you for the introduction, Beth, and good afternoon, everyone. So I joined Lombard Odier 2 years ago, and I was tasked to embed Geospatial into our sustainability products. So basically, the where element. So in order to do that, I want to start by bringing this framework, which some of you might be familiar. This is a science-based framework that basically relates our economic model with the impacts on different environmental systems. This is very important for us because it's the framework that we use to develop science-based metrics. So this is what we have done already for our temperature alignment metric, but temperature alignment in itself doesn't tell us the entire story. Basically, companies, in order to transition, are going to experience costs. So we might have some companies that are going to benefit from this transition, but might not be well aligned. But also we might have other companies that are well aligned, but still they need to invest in adaptation resilience. And this is because of increased severity of physical risks. So what we do in the metric climate value impact is to bring together this financial metric on how all these risks are going to play together. So as you might know already, physical risks are of course location specific. So what we are doing in a nutshell is basically we have layers of information, as the one that I show here on coastal floods. These layers are specific to some climate scenarios, some years, and we also have attached some probabilities to them. We relate these layers with a database we have on companies' facilities. We have 12,000 companies that we look at. And parallelly to this, we understand what are the typologies of these assets. So are these assets industrial buildings, transmission lines? And in that sense, the insurance industry has already provided a lot of research about this, giving us damage curves. So what is a damage curve is what we have here in the bottom, that basically allow us to relate if we experience that flood in meters, what would be the damage to the infrastructure. So there are going to be some infrastructures, depending on the countries, that are going to experience more damages. This is relevant because it allows us to do the translation between the exposure of the floods to potential damages. But now, we are looking at a company. So normally, when we look at these assessments, when they are done at a project level, it's quite straightforward because we might know already the value of that location. But in our case, we start very much by the company numbers. So what is the value of the property, plant, and equipment of the company? What are exactly the revenues? So what we have done in-house is to develop a methodology to start allocating to each of these assets that value, and that is based on some revenue splits that we have. So basically what we do is that we attach that importance of the assets, we understand the damage that those assets are going to experience, and then we sum that across companies, and for each physical risk we are able to provide some figures about what is the expected damage that this company is going to experience on infrastructure or disruptions due to revenues. So I just want also to take a little bit of time talking a bit about what we have been doing on the nature space. This has been very much an effort from the last year So the first thing is that when you start moving to other planetary boundaries, like agrochemicals, land use, it starts to be more relevant for some sectors, like the agriculture. So the first thing that we do in our metric is to define how material is an issue to the company. So in this case, deforestation, we do this through company revenue splits. And then the other side that we look at is how the company, what are the impacts that they are having on this issue. So for this, we use Geospatial, and specifically what we have been looking at is a very simple assessment where we look again at these companies' facilities and what is the historical footprint of those against protected areas and intact forest landscapes. So we are able to get that legacy of the companies that we are looking at. So you might say on this, well, actually we are doing an assessment on biodiversity proximity to areas of risk, not necessarily of deforestation. So this is very much a part of our research that the University of Oxford has been helping us over the last couple of years. And we have been working in 2 projects parallelly. This is not systematic, but we have been doing it on specific case studies. So the first problem that we have is that when we look at existing deforestation products like this one from the University of Maryland that you have on the right, and you look at the assets that we have on the landscape, let's suppose we have 2 mines here and we have some agricultural patch here. The question here is how do we allocate this impact to existing companies for which we know the ownership, so we know which is the company behind both of these mines. So here we use remote sensing, specifically one index that allows us to distinguish between bare soils and agricultural patches. And then we have been using clustering techniques and machine learning in order to understand these clusters, how they are associated to specific points, assets in this case. So we are able to say the company that holds the mine A has been responsible for X amount of square meters or forest loss during the last 20 years. And the second project, which is a project that Christoph here and Juan Sabuco has been helping with this, is that we, of course, on the nature space, there is a big blind spot on agricultural databases. We don't know very much where farms are, where processing facilities are. So we started very much by getting together a database of abattoirs. So basically, these are processing facilities of beef. And we have done this for the 5 top beef producers globally. And currently, with the help of the university and the researchers, we are writing 2 academic papers. The first one will be on how to use this information to get a scope 3 emissions. So basically to understand these processing facilities and emissions associated to land use changes around the farms that are supplying them. And the second question that we have more on the deforestation space is how these processing facilities link with farms and basically allow to distinguish deforestation impacts, but also direct and indirect suppliers. So this is all from my side.
Good.
I think I have been good with time, I hope.
Little over. We're okay. We'll be fine.
So thank you so much.
Thank you so much, Laura. That was really great. All right. Next up, we have Irene. Sure. Should we do? We'll do the presentations, and maybe we'll just go straight to audience Q&A and get your priorities out first. I think if that's okay with the rest of the panel. Yeah. Super. Note it down.
Need a bit of water.
I had some throat issues before. Hi, everyone, and thank you again for inviting me to be part of this panel. I am thrilled to be here today. Sorry. Let me close this. So, my name is Irene Benito, and I work at Planet in European Affairs, which is a posh way of saying that I'm a lobbyist, but the best kind. And I think you're going to be convinced at the end of the presentation that what we're doing at Planet really is going to help us construct the necessary measurement systems to see our progress towards the 2030 and 2050 objectives. So I come from a company, as I said, called Planet, which has constructed and operates the largest constellation of Earth observation satellites in the history of humankind. And this is an incredible data set that we have, which is building and is offering an unprecedented level of transparency to the changes that we're observing on our planet. And of course, it's extremely valuable for sustainability, and specifically, I'm going to be talking about some examples in the area of deforestation. So, you can't fix what you can't see, and you can't manage what you can't measure, and this is something that really drives our work at Planet. We're trying to fix problems which are enormous, with challenges such as climate change, biodiversity loss, environmental decline. These are multidimensional and planetary in scale, and you cannot attempt to fix them if you don't understand the issues at hand. And Earth observation here really plays a foundational role, because it can help us build the necessary measurement systems, which are global, which are consistent across territories and across countries, and therefore they can really help us, again, build these necessary systems to really measure the progress. And they're going to be relevant to every company, to every country, and to every player. And this is really where Planet comes in. So our mission has remained the same since we were founded in 2010, and this is to image the entire world every day and make this change visible, accessible, and actionable. And here I hope that this will work. Fantastic. And how do we do this? Well, we do this with a constellation of over 200 satellites. And you can see them now in the screen. We have first our PlanetScope Dove satellites. These are the size of a loaf of bread, a German loaf of bread, not a baguette. And there's almost 200 of them. And they're constantly orbiting the Earth. And this is producing a line scan of the whole of the planet on a daily basis at 3 meters of resolution. And then we have another constellation, which are called our GHGSat satellites, and there's 21 of them, but it's a tasking constellation. So this is taking acquisitions on demand at a resolution of 50 centimeters. And as you can imagine, the data set that we are building with this kind of assets is incredible. We have over 4 million images being acquired every day, which is 10 times more than all the public and all the commercial providers of Earth observation imagery combined every day. So, what is the usefulness of this data? So this data is extremely useful, of course, to monitor changes happening on the surface of the planet, and it has enormous applications for deforestation. We are able to monitor change on the planet in high resolution on a daily basis. This means that we're able to monitor and look at global forests every day at a level of detail of a canopy, which means that we can very precisely detect deforestation and detect degradation in almost real time, so on a daily basis. And, of course, this is very, very useful for the precise definition of deforestation, of the degradation. So here we have a public data set, Landsat, which is owned by the US, and Planet has really completely transformed the way that we can detect deforestation. So here you see a model applied on top of Earth observation imagery, and as you can see, it detects deforestation in parcels C, D, and actually a bit in B. However, the level of detail of the data is not sufficient to identify all of the deforestation and degradation that is happening. And it actually even erroneously assigns some deforestation to parcel B, which is problematic, especially in phase with the new regulations that we're seeing, where ownership has to be correctly assigned. And if we compare this with what you can see with Planet data, with a model built on the back of our daily monitoring acquisitions, you see that it's a lot more precise, and it can really a lot better detect and correctly assign deforestation or degradation to the level of the plot of land. And my last example, it's important to measure that not only the level of detail, but also the daily frequency is essential. Because of course you don't want to miss small-scale events, small-scale levels of degradation, such as selective logging, but you also don't want to miss changes that happen fast, but also disappear fast. And selective logging is one of those. Research by the Joint Research Center of the European Commission shows that signs of selective logging due to vegetation regrowth can disappear as fast as in 3 months. And if you're looking at a very cloudy region in the world, such as the tropics, if you only have acquisitions, for example, every 5 days, like Copernicus data, it may be that every time that you have an acquisition, there's a cloud. So you may have several months where you don't have an acquisition. And this may mean that you might actually never detect selective logging or small-scale changes. So you can see here, the level of detail can be represented by this kind of broccoli effect. I don't know if you can see it, which are the individual canopies. And then you can see, changing from September to April, you can see how then some roads come up. Then there's some individual little pockets of forest loss, which are selective logging events. But if we move from April to August, you can see that actually due to vegetation regrowth, some of these pockets are actually not visible anymore. So you really need this daily data. And now I'm finishing. So my last slide is to talk about the power of the data, but what still remains to be done. So geospatial data has advanced enormously, and Adina is going to be talking about this a lot more. So we have data and we have insights on the back of this data that can really help us detect the when and the where of issues such as deforestation, such as emissions. However, we need to go further, and we need to combine this data with asset level information, like Laura was mentioning, so that we know exactly who is sourcing from a specific soy mill, or who is emitting from a specific facility. And for that, I call on the research community, everyone here, to help us merge these data sets, because we don't want to be writing the obituary of our planet in high resolution, as said by Rebecca Moore, a director at Google Earth Engine. And that's it. Thank you. I went really fast because my presentation was 8 minutes.
Thank you so much. No, that was perfect. And Kamil, next up.
Going to get NASA out of business.
I told you guys it would be visual stimulating, so it's good for an afternoon.
Awesome, thank you. Hi everyone, my name is Kamil Kluza and I'm from ClimateX. What we are doing is projecting until 2100 the probability and severity of extreme weather events linked to climate change. So things like flooding, subsidence, coastal erosion, landslide, and so on and so forth. The bigger the library, the better, because it's more applicable to different countries and different economies. I put transition in here because recently, due to huge surge in demand in the UK, the energy efficiency certificates are the theme of the ball for this summer, so we added that recently too. No, I'm preaching to the converted, but I just wanted to put things into perspective. Everyone's been talking about transition risk today, but let's just focus on physical risk for a second. Some cool statistics. Elon Musk's net worth is around 278 billion USD. However, if you compare it, and there's a Finland's GDP in here and a couple of other boxes, but compare it to the cost per annum of the physical risk of climate, that's what can actually materialize if we don't act soon, and that's the RCP 8.5. At the back of it, obviously, there are trifold forces driving the change. Obviously, we know there's a commercial sensitivity. There's the fact that the firms will generally want to gain. The investors would want the firms to actually change their behavior and start measuring things. But actually, it's the regulation that's forcing the difference. And finally, our product Spectra, what we do, we help the financial services firm to do scenario analysis because they're mandated to do so, the underwriting because they want to do so, and the portfolio management somewhere in the middle. Now, how? We've built a digital twin of the Earth. So effectively, what that means is we combined a lot of remote sensing data from NASA, ESA, we've got LiDAR as well, and then we kind of vary between satellite imagery to synthetic aperture radar. That's basically radio waves. We use those different things for different inputs to the digital twin model. We've got 20% of our models is basically other observational data that feeds into some of the asset information that we mentioned before. Now, moving further, why and how we do it. So, because of our geospatial data is probably at best 10 by 10 meter, but this is actually enough to calculate the risk appropriate to a specific asset. So what we've done, we standardized whole countries into little grid squares as little as 10 by 10 meters. So then we linked the climate projections onto it. So things like rainfall, temperature, and so on. And then we used physics to see, let's say in case of a flood, when you pour in the water, where the water goes, how it goes, and so on, based on the different parameters that you can see here. So obviously a slope, a digital elevation overall will cause a big difference in terms of how you flood it, when you flood it, and how deep your flood's going to be, for example. We also use machine learning to calculate some of these models. This is typically for geohazards. The geohazards are pretty complex to model, and that's why when systems are too complex to model with physics, we default to machine learning because of the fact you're not only looking at things above the ground, you're looking on the ground and under the ground as well. So this is where it becomes quite interesting. Now, I promised pretty pictures. So these are some of the examples of the remote sensing we're using. We're using vegetation, we're using digital elevation, bedrock, couple of others in terms of slope and so on, and that's to enhance our risk library. So it's actually quite interesting because the latest CBES findings, which was the biennial climate stress test exercise that was run by the PRA here in the UK, they basically said that a lot of firms, quite disappointingly, were only focusing on the flood. However, the inland flooding in the UK is just half of the causes of the losses that are related to extreme weather impacts. The other half is actually linked to subsidence and wind. And this is what the firms are actually gradually starting to grasp, is that actually you're not only exposed to one hazard. The more you expose, the more you spread out globally, the more hazards are actually being applicable to your portfolio. I don't necessarily need to talk about that, but I wanted to give you an interesting example. This is a typical output from the National Environmental Agency data, because we hear this thing every day, and that the clients sort of default to the data that's available in the market. This is a flood map that shows a low risk in the Hackney-Wick area. Hackney-Wick area has been flooded last year in July. Basically, there was a severe case of the surface flood, which is something that Environmental Agency didn't pick up because they don't look into the future. They just focus on the past flood events. And this is what came out of our model. So effectively, using the digital elevation map and a bunch of remote sensing, we actually could project where street by street in Hackney-Wick there will be an area of flooding. The area is actually much cooler right now. This is an old train station, but nevertheless, street by street, we actually managed to work out whether the flood will be there or not. I could briefly talk about the loss methodology, but I think we wanted to talk about geospatial as well, and I know that we've been talking briefly about the transition risk. So as you all are aware, and I think I mentioned that earlier in the question that I did ask the previous panel, the transition risk is very important, and every single financial services firm needs to capture the energy efficiency of our respective assets. Now, the data for that is super patchy. I mean, there's 50% coverage across the UK and OEU, for example, and the remaining 50% that needs to be actually magically come up with. So we're using a combination of geocoding as well as machine learning. So we look at things such as a building age, how tall it is, what type of a building that is, and then we use the machine learning together with the geocoding to actually work out whether a similar building next door or your neighbor would have an EPC rating that is valid, and that could be applied to your given property. So that's Spectra. This is what our platform looks like, and I think I'm briefly running out of time, so I say thank you here.
Thank you so much, Kamil. Yeah, Kamil made a point which maybe, so a lot of the times the information that existed previously was sort of collected on historical information, and the potential for remote sensing to bring it up to date, I think, is one area of application that's quite useful and interesting to think about. Next up, we have Alex Money.
Thank you. Thanks for being here. So I run a younger company than the others on the panel, and by the sounds of it, a rather less successful company, but that's good. It's good to have some role models to live up to. So this is kind of a slightly more personal, a more personal perspective on how we use geospatial data, and as Beth says, with a focus on water risk. So it's sometimes said that if climate change is a shark, then water stress are its teeth. Well, I say it. I don't know if anyone else does particularly, but. The interesting thing is that today there's about a billion people living in cities that are exposed to moderate to chronic water stress. By 2050, that'll be 2 billion people. Today, 65% of irrigated cropland is in areas of high to extreme water stress. Per capita availability of fresh water has dropped by 20% in the last 2 decades. Of the 20 largest institutions that finance companies with exposure to water stress, the total amount that's been financed the last 2 decades is about $2.5 trillion US. And a third of those institutions have no basis of measuring or understanding the level of water stress, water risk that they're exposed to through those investments. So there's lots of reasons why this stuff is interesting. And really this is just a graphic that just tries to catch some of that. So I mentioned a couple of those stats, but I'm sure you've seen variations of this before. I think as others have spoken about, the challenge of risks like water is its location specificity. You know, this is all about local supply and local demand. And then on top of that, the conditions that determine that supply and demand vary in every location, every microbasin. They vary for physical reasons, of course, such as weather, climate, and so forth. But they also have different regulatory and reputational dimensions to that. So it's a difficult thing to address, and which is why people are focused on it. The state of the art today is stuff like this. So this particular example is Aqueduct from WRI. It's an excellent tool that uses a water balance model to understand the dynamics of demand and supply across the planet. It serves lots of really useful purposes, but it is a model, right? Nothing is observed, everything is so nothing is validated. So the utility of the model depends on the inputs, and they date and so on and so forth. So the thing that we tried to do, and I come at this with about 10 years of water risk experience here at Oxford, and then a bit of time before that in finance and whatnot, our mission was to see, well, can we do something better with that using observational data? And this is when I get hopeful that everything works. So you've seen prettier versions and much better quality versions of this, but the reality is that we can use geospatial data now to be able to get a time series of surface water availability for pretty much anywhere. It requires some tuning, and in this example, we're bringing together a constellation of different publicly available satellite data to try and put these together. On top of that, what we have done, I suppose, the thing that we've done is we've been able to extract from the imagery. We're able to identify water extents, and from that look at their relationship with things like weather, and then in the much longer term climate, to understand how those water bodies and the surface water availability may change over time. Water's challenging, right? Because it's networked. Downstream water availability is a function of what's happening upstream, and so you need to understand the whole catchment to understand what the likely changes are going to be, and that's kind of the thing that we have spent a lot of time doing. I can see Steve Reese in the background there, so I'm going to be very brief on this. He's Mr. Machine Learning at this university, and so I'm not going to dwell on this. But we use a computer vision, machine learning, active learning approach to understanding the relationship between hydrological basins, water availability, and then relationships with historical rainfall and temperature, and then projections. That's the science bit. The bit that I wanted, have I got a minute? The thing is, so that's all great, right? So we thought we're terribly clever with all this stuff, and then we tried to raise money, and that's been slow going. And the thing that we've learned, probably a bit late compared to some of the others in this room, is that you've got to really be clear as to what the customer is and what they want and why they want it. And so in the last few months, we're part of a program that Innovate UK and the Centre for Greening Finance and Investment have supported us with, which is go and talk to more customers or prospective customers to find out what it is that they actually want. There's kind of 3 or 4 things they've been saying to us. So water risk, which is passionate to my heart, passionate to Beth's heart, it's still in the pantheon of risks that investors worry about. It exists, but it's just one of many things. And the challenge with products like ours is you can't expect people to pay a lot of money for that, given everything else that they're fighting to do. And so thinking about what you're offering at the price is important. It's also the longer the journey between the output that we can deliver and the input that they have to go and do something, the longer that gap is, the harder it is for people to use this stuff, right? They want out-of-the-box things to go and put in. Satellite data and observational data tells us a lot of things, and without it, we're the poorer. But in things like complicated risks like water risk, which have all these different dimensions, it's only part of the story. And so what we're learning quite early on in this process is how to integrate observational data with all the other things on the regulatory side and reputational side and so forth that matter. And so anyway, so these are just a few of the summary learnings that we've taken from that exercise. And where we are today is developing quite specific products that have been based on the things that we've learned. I don't know why I put these slides, and I'm not going to inflict these boxes on you, but the gist of it is, thinking in quite specific ways, not just about the problem that we think is important, but trying to understand better from customers what they think they need to focus on. And that's been a good learning for us. This is just lots of slides that you don't need to see. I don't know why. But let me stop there. I'm just panicking slightly about the time. Okay. And very happy to talk a bit more about that user journey bit if it's helpful. Thanks very much.
Thanks, Alan. And yeah, don't worry, we'll go straight to audience Q&A, so that buys us some time.
Hey everybody, so I have to say, I'm just going to be really frank. Thank you for the introduction, Beth. Yes, I am a space geek, and yes, I am a geography geek. And last week, I was actually with 14,000 of my geography geek friends in San Diego, and during an important meeting I was having with an important colleague, who wandered in but Spider-Man, and Spider-Man was there for Comic-Con. He was a bit early, but anyways, there he was with us. So I was thinking about that this morning, and I was like, I'm a little like Spider-Man here today. So I'm your Spider-Man of the spatial finance event here. So let me just talk about what we are at GHGSat, what we do, and then I'll sort of leave it open with sort of a thought on what spatial finance or sustainable finance can do using this technology. So, what is GHGSat? So GHGSat is a private company. We operate a constellation of satellites that collect greenhouse gas measurements at facility level. So it's the only purpose-built capability in space that can identify greenhouse gases at facility level. We have 6 satellites in orbit today, and we have another 5 launching next year. The pictures you see there are the applications in which we can see emissions. So we're very targeted and very specific about what our technology is and does, getting to the point of who is your customer? Our customer is anyone that wants to know about methane emissions from industrial facilities. Really briefly, I want to keep the comments to a minimum so that we can get to questions. That's the interesting bit of the day. The point is, it's happening today. Last year, with just 2 satellites, we measured emissions from more than 100,000 industrial sites around the world. So that was 2 satellites. Since then, like I say, we launched 3 last month. So it's been a busy time, and the capability is growing. There's lots of comments that I could make about validation. The thing in the red circle is really the only thing that matters. People are blind testing us all the time. Separate to this study with Total, Stanford recently did a blind study where they tested everybody who's anybody in this space. And that study has just come out. Anyone that's interested in this topic, please let me know. I'm happy to share that with you. And here's the pictures. And I'm sorry, they're not pretty, but they're pictures. So what do we see from space, and why does high resolution matter? So here's some examples of what we've seen in the last year from GHGSat. So you see in that first image, we are able to actually discriminate between facilities on an image. So that first image of China, that's 6 different coal mines, and that would be just a handful of pixels on any of the public data sets. So you couldn't actually separate the emission sources and identify where they're coming from. That's something that we can do. So we can separate them from one another. And then in the middle, there in the Permian, you see a really highly populated oil and gas field. And this is where we need the high resolution to actually attribute the emissions to a facility. Then third, a little bit less interesting for this community, but really important for operators, is actually characterizing what the emissions look like. So we work with landfill operators that go out and we tell them exactly where to go to seal the cracks in their landfill caps. Again, not a pretty picture by any stretch. This is a series of measurements taken of a site in Central Asia. Some of you who know me will have seen this before in different ways. This is the imagery that we've collected over a span of about 6 to 9 months. The triangles that you see, those are actually oil and gas infrastructure. It's a really, really messy space. We've been watching this spot for a very long time, and what I can tell you is having the time series characterization of these sites is equally important to everything else, so we can see what's going on over time. One of these leaks that we got involved in stopping actually was the equivalent of taking 1 million passenger vehicles off the road for a year. So this is very high impact stuff. It's a big opportunity to change the space. But of course, what does the media want? The media wants sensationalization. So here's some examples of it. This is what you see a lot of about GHGSat and some of the other folks operating in this area. So CNN picked up our cow burps from space, first ever agricultural emission. We've had landfills in Pakistan. The Russian mines got a lot of attention about a week and a half ago. So that's all really interesting, but the point is where we want to get to is what's the application for sustainable finance. So someone said outside in the corridor earlier, what the heck is spatialization? And spatialization is really just this. It's bringing geographic, spatial data and context to the real world problems that you all are trying to solve in the climate finance community and the sustainable finance community. So here's just a list of some thoughts on what can be provided. These are the things we look at in GHGSat for our ESG solutions. So my point today is really just 3 things. One of them is to say, hey, the satellites are out there today, they're delivering capability today. The second one is to say, we need to work together. So I can say that less than 2% of the emissions we measured last year were actually mitigated. And we need everybody. So the sentiments earlier today, they're true. Everybody needs to be part of the solution here. And so we invite everyone to work with us. And I say that on behalf of the entire panel because we all want to bring our solutions to your party so that we can collectively solve the problem. So that's my comment. The third thing is just to say, hey, take it easy on Spider-Man when we get to the question time. Thanks.
Thank you so much. Great, thank you. So you've heard from a lot of the capabilities that satellite imagery and geospatial data and analysis can provide in this space. So we'll turn it over to the audience Q&A. So I see 3 hands, so we'll take 1, 2, 3 first, and then we'll come back for more.
I have the mic, so I'll start. My question's for Laura. My mind was a little bit blown by your presentation. I didn't realize that any asset management firms were doing this level of analysis. I wonder if you could address how your firm decided to invest in this in-house rather than going through a consulting firm, and why. That'd be really interesting to me. Do you want me to get all the questions?
Yeah. So there's one here, and we'll come back.
Hi, Vignesh. My question is that I understand that NASA also produced data sets. What is the differentiation factor between 2 people, planet and yours? What is the difference? What do you do extra? And again, what is the cost of launching a satellite? It seems like a very good business model. Everyone was saying that they can launch satellites. I just wanted to understand what is the cost there.
Super question. We'll go to that one in the back.
Pekka Piirainen, Climate Risk Services. Thank you firstly for a great set of presentations. Rolling 2 questions into one. I really enjoyed that point around precisely wrong versus roughly right. Considering some of the current limitations in that data that were mentioned as well, relating to ownership structures, damage curves for types of events that might never have happened in human history before, do you think that there's a serious danger potentially here that we're trying to fall into that trap of precisely wrong?
Okay, super. So we had a question on how do you get your own asset management firm, I guess, to get involved. So we'll go to Laura first, and then I think Adina and Irene, there's a question on what sets you versus, I guess, some of the government-led initiatives and programs apart and the cost of launch. And then for Kamil, in terms of the damage, and Alex, I think both of you could touch on maybe uncertainties and the damage it occurs, given that climate change is sort of taking us into unprecedented territory. Is that, if I summarize that well? Okay, super. So over to Laura first.
Okay, thank you. Thank you for the question. So just as a background, the company 2 years ago, we had only an ESG team, and it was an internal decision to start allocating funds into sustainability and understand the trends. And that's what spurred that 25 people are now hired. We are a vast team of machine learning specialists. We have Geospatial analysts. But I think in order to allow that this emerge in other asset management firms, there are some regulatory precedents that are coming with quite a lot of strength. So we have, for instance, the FDR is asking for some indicators that are specifically what is the amount of your investment that is within areas of protected areas. We also have the EU regulation on deforestation coming very strongly, where companies are going to be mandated to have traceability systems in place. And I guess it's the same as well with what we're seeing emerging with the TNFD. I was really happy when I was reading the beta release to see that location was basically put at the core of that framework, saying we need to address the question of location to understand nature-related risks. So I think there is already a reason why we should have geospatial insights. I guess in order as well to see it more also like as an opportunity, I think it's important to highlight that geospatial is not only to assess risk, but also that we can, from a space, using all the information that some of the panelists were talking about, also show some companies that are doing regenerative practices on their farms, but also as well on the trading space. In some companies, we have that they use it. So for instance, for crop assessments, to understand what is going to happen with the crop yields, or if there is a hazard happening, having like a near real-time view on which companies might be exposed to this risk.
Super, thanks. Irene, do you want to take?
I can start, Adina, if you want. So I think the question was if there's already public data sets such as those provided by NASA, Landsat, I showed an image, and of course in the EU, the Copernicus program, why do we need commercial data? Of course, all of us, and I think Adina will agree, like the ecosystem exists because we have relied on these historical data sets, and in this, like we're standing on the shoulders of giants. However, what is provided publicly is not enough, and there is an enormous room for the commercial sector to innovate, and we are living actually like something that we call the space renaissance, where led especially by falling launch prices, there's been enormous innovation coming from the commercial sector. Today, for example, if we look at Sentinel-2, which is Copernicus's mission, which is similar to ours, they're providing a resolution and a revisit frequency that is just not enough for the needs that we have today to actually tackle biodiversity loss or tackle deforestation. You cannot meet the requirements, for example, of the deforestation proposal that Laura was referring to, which wants to measure at the individual tree level deforestation and degradation anywhere in the world, with a data set that provides pixels of 10 meters times 10 meters. There you're just not going to have the sufficient precision. And you also need daily data, as I said, because of cloud coverage in areas such as the Amazon, which is super cloudy. So there is room for both, and definitely, like, I mean, our impression is that the public sector is not trying to crowd out private investment, that innovation is encouraged, and that these data sets are enormously complementary. We harmonize and we align our data sets to what is publicly provided, so that data sets are interoperable. And I don't know, Adina.
I agree entirely we do stand on the shoulders of giants, so we use the public data all the time. It's really essential for everything that we do, but it just, as is already said, it doesn't perform at the level that it needs to. So if you look at what we do, the resolution of those satellites is meant for regional and global scientific studies. It's not meant for go find the leak and shut it down and deliver that answer fast. So it's just not built for that. And frankly, the public sector doesn't want to do it. They don't want to take on the financial burden of actually building that capability. And ours is a lot less costly, so the private sector can do it. So by way of an example, the satellite that was just announced for the European Space Agency like 2 weeks ago, doing something similar to what we do, and we wrap our arms around it, we embrace it, we welcome it, we want it because we'll use the data. But that satellite is going to weigh 1 ton. And ours, by way of comparison, is 16 kilograms. So it's the size of a microwave. It's a totally different thing. It's just not something that they want to be involved in. And coming to answer your question on launch, well, actually, just let me come back to that for a second. The other thing that they can't do is they can't effectively offer the services for the private sector. So the data coming from their missions is driving public policy. It's not driving commercial activities. So Planet has a boatload of commercial services that they provide and customers of theirs that use their data to provide other commercial services that NASA just couldn't do and the European Space Agency just couldn't do. We have lots of examples in GHGSat as well. The one that's relevant to you folks today is that we've just put together an ESG product. We'll launch it. I mean, it's quick, it's fast, it's fit for purpose, and frankly, those guys just couldn't innovate that fast. But coming back to your comment or your question on launch, if we think about that 1 ton versus 16 kilograms, it's so much less expensive to launch 16 kilograms than it is 1 ton into space, right? So the launch costs are coming down generally because SpaceX is involved. There's greater cadence. I know Planet has launched on SpaceX. We've launched on SpaceX. They move fast, and they help us get to orbit fast. So it's a great situation which allows us to do that. And the costs have come down because of all of that. And we also require less space to get 16 kilos up.
And the speed at which our satellites get up there, like not only do we innovate fast, but we also put them in space fast.
Yeah. Our satellites we just launched, we commissioned in 5 days. By way of an example, the European Space Agency mission, similar to that, or comparable in a way to that one, took 8 months. So we just have the ability to move faster in all of these things.
If I can chime in just from a simple user perspective.
Sure, and I think if you had do you want to just say what your follow-up was for this, because this was your question?
Well, I mean, that is part, but I'm actually talking about the Earth observation missions of Copernicus, so including Sentinel-1, Sentinel-2, so these are radar, optical instruments, Sentinel-5,
Yeah, so Copernicus is an EU program that launches more satellites than any other organization in the world. So they actually deliver 9 terabytes of data to the ground every day. It's very impressive. And the Medium Weather Forecasting Center actually uses that data and other data to deliver the services that they do. But Copernicus itself delivers a whole load of other services beyond just the weather, the medium forecasting part of it.
Super, thank you. And Kamil, do you want to come in and then maybe take that?
I was just trying to comment from like modeling perspective. So we modeled subsidence across UK and EU, and we were using the Copernicus product to start with. But because of the fact they only have 2 satellites, they can only go and cover as much land as possible. What we wanted to do is really, really long time series. But have we had a swarm of satellites measuring a certain area more frequently, our life would have been so much easier and would have delivered the more accurate estimates. But because there's only 2, so, no, one is down now, yeah, that's correct. Well, it died this year. So the problem was that we had to extend the time series in which we had to do it because we wanted to compare the certain angle at which the satellite would fly over a given area to get an accurate reading, and we're using the radio waves to measure how the ground was shifting, going up and down, and that had to be quite precise because we're sometimes talking about half a centimeter doing things. So yeah, having more satellites that swarm in is definitely better and more helpful to actually deliver more accurate results.
Super. And on unprecedented times, and yeah, do you want to, Alex?
Well, if I could just say one quick thing on that sort of roughly right and precisely wrong bit. So, I mean, when we got our first investor check, I think one of the first things I bought was I trademarked Oxio Best Guess. Now that probably wasn't the best use of investor money, you might think, but it kind of goes to this point, right? That I mean, we're in the business of forecasting future water availability. I mean, we're going to be wrong. The question is, are we going to be useful? And I think one of the challenges, particularly for fund management decision making, is that that dynamic is used to, it's a pricing dynamic, right? It's used to specifics. It's less good at understanding how to deal with probabilistic forecasting. Although that's intrinsic to financial services products, it doesn't work super well for the sort of risks that we're trying to identify and project. So I think this issue of specificity it's a really important question, and the bit of work that we're really interested in, we talked about collaborating on, is how do we articulate and communicate what these roughly right forecasts can be used for to improve capital allocation decisions and make them more sustainable.
Super, thank you so much. So I saw 3 more hands. Yourself in the green, and this lady over here, and then maybe we'll take this one as well. We'll try and do another round. So first here, the lady in the blue dress. Sorry, Christoph. And then we'll go to green. Lady in green, thank you.
Thank you very much for great presentation. It was really amazing. And I have a lot of questions to each of you, if you don't mind. So I will restrict myself to one question per person.
Maybe we can do some follow-ups afterwards.
So first, my question is to Laura. So you mentioned you are so in your models, you're using one index to tag the bare soil versus vegetation. I was wondering, why is that? Having a large team of 25 people, as you mentioned, you can take into account all their land use classification, and you can calculate the biomass of the vegetation, so you can go really much deeper into analysis. So why are you restricting yourself to just one index? Yeah, so yes, next question is to Irene. Since I'm a researcher, I work as a lecturer in Mary University. I have an obvious question. If your 8-band satellite imagery will be available for free for researchers, for research purposes, and if there is a way to apply for a grant to obtain your imagery, I
can just say yes. ESA EarthNet program.
Okay, thank you.
I'll share the information later.
Thanks. To Alex, my question is, when you're creating your models, do you include evapotranspiration? Because, yeah, you do. Okay, thank you. Yeah, that's it, thank you.
Okay, thank you so much. So I think there was one that wasn't answered for Laura, so on your index and vegetation. Sure.
Yes, so I showed at the beginning of the presentation the planetary boundary framework. So we started prioritizing those boundaries for which companies have actually policies, because we look as well if companies have policies on deforestation. But moving forward, we are thinking about new sets of metrics that we want to embed in our investment process. One of them, as you say, is soil organic carbon, because it definitely has a lot of potential as well to look at a positive impact when you have regenerative agriculture in place, for instance. But I think it's important to bring here the point that we cannot have a lot of metrics in isolation. So I think the challenge ahead lies into how to integrate all of them from the investment perspective. So we might say we are advocating for no deforestation. If you are a company that is in the agricultural sector, but also, let's say, mining areas, so basically no interventions in protected areas. But at the same time, if you're an agricultural company, we might be measuring impacts that you're having on the soils.
Super, so plans to expand, but starting with the policies. Great. Should we take your question? And maybe we'll take the batch of 3.
Thank you. I'm Nikki van Dijk from Friends of the Earth in the Netherlands, so a civil society interest here. I have a very broad question for whoever wants to answer it. So coming from a civil society, I'm very interested in the possibilities that spatial finance could have for us, showing where the big emissions are, where the deforestation are, and where that doesn't line up with the disclosure or risk disclosure of financials. When you're dreaming about what the future of spatial finance holds, where do you think other possibilities are for civil scientists to use this new emerging field in what we do, either for potential litigation or for activism or, yeah.
Okay, super. Thank you very much. Lady in the grey sweater, and then we'll go to this gentleman. Then we'll take another round.
Hi, Bridget Fawcett from Citigroup. Really appreciate the presentations and the remarks that you've made. This is a really exciting space, no pun intended. But the question I had, which was very similar, which is, as you think about the future of spatial finance, what does that really mean? Because there are a lot of really interesting use cases for this on a bespoke basis, and certainly with a targeted client set. But I guess I'm trying, and there's a lot that we could all brainstorm and that we already know that we're using. I struggle a little bit with the notion of spatial finance, which I know was an Oxford designated term, like where the finance is. So a lot of the discussion has been around data and data science, and of course, data-driven insights from satellites. And so I guess my question is, are you seeing firms developing spatial finance groups? Are you seeing these efforts being housed as part of the data science applications at firms? I'm just curious around where you see this space going on a forward basis.
Great question. Go to this.
Thank you. Very quickly, why isn't Google in this? And second, why methane and not CO2? Is it just because it's easier, or?
Super. 2 questions. Where is Alphabet, Google? and I think there's just one more question. Maybe we'll take that one, and then we'll go around. And I see some tentative hands that are popping up, so we'll try and answer these and then go.
I'll be sort of following on from the question from the lady from Citigroup. Where do you think are the main blockers to the adoption of your services within the ratings agencies, the information providers, and then the banks and asset managers?
Super, fantastic. So first up was sort of what does the future look like for this space? I think we can kind of, hopefully, if you can keep your remarks to also focused on the application in finance, really, that you're saying. And then we can take the next one on sort of also what parts of financial institutions are you looking at? What are they doing there? So does anyone want to come in first? Adina, I see you.
Yeah, thanks. These are all really great questions. So I have to say this is not a technology-driven solution. The solution we brought to the table was entirely founded on the principles of the carbon trading schemes that were coming out of California and out of the province of Quebec in Canada. We have always, in all circumstances, been driven by actually a customer need, not a technology push. So in the case of spatial finance, we've actually had 2 independent studies commissioned, and we'll have an event to talk about those studies. If you're interested, please feel free to contact me. I would be happy to have you there. So for us, coming from those studies, what we know is that the emissions reductions are the #1 priority for portfolio managers. And coming back to the comment earlier, the key is getting this data in an investor-suitable format. Because anyone that is lending to, investing in, or insuring, any industrial operator or other needs to know this information. And we've got it. We just need to package it in a way that you can handle it. So coming to what does the future look like, it needs to look like us working together to get there. Because we don't know what you need. I'm a geography geek. I'm not a finance geek. So bring me some finance geeks and we'll put it together. So that's why for us, our first iteration of the ESG product is coming out, and we'll probably get slapped around a lot for it, and that's okay because we need to get there somehow. So I also invite you to come and slap us around about that. And so I don't have to come back and take time. Why not Google? I don't know. Google's everywhere. We work with them. We're partnered with them. They're kind of on all of this. So that's all good news. But I am going to come back to your question on why methane, why not CO2. There's 3 reasons, and the first one, it is easier. Technically, it's an easier problem to solve. We also found that's where the market was. So again, coming back to who's the customer. People weren't going to buy CO2 data at the time that we developed this. They were going to buy methane data because the oil and gas operators want to know where their leaks are so they can save money. So, and there's all kinds of safety risks as well around all of that. So that's why methane, it's technically easier. The business case was there. And to be fair, our first demonstration satellite was designed to do both. And what we discovered was that by doing both, we compromised our results on both. And so all of the subsequent satellites are tuned specifically for one gas, and it delivers against one gas. So that first satellite didn't perform quite as well, but it was good enough to demonstrate the capability and sell some commercial services. Now we've tuned it, and it's just skyrocketing. CO2 is coming, and it's coming very soon. So watch this space from GHGSat. Thanks.
Can I, Beth, just super quickly on the societal point and the finance point? So I'll just talk about water because that's what we do. I mean, water is a fundamentally mispriced asset, right? Fundamentally mispriced. The correlation between what utilities charge for water and water scarcity at the location, the R-squared is near to 0. So one of the things that we're trying to do with observational data is help explain in a systematic way how an asset like water can be valued, and with that are the societal implications that come from within that. And the financing connection, if an asset is mispriced, right, and there's an externality associated with it, what you want to do is improve the quality of information that then gets discounted back into how an asset is valued and how the pricing works. So I think the bridge is a pretty narrow bridge to make. The challenge that we've got, I think all of us, is making sure that the lexicon of how that's communicated and all of that stuff gets better. Thanks.
And I guess in terms of the future, so where we are is in terms of adaptation of all the rules and this technology is very much early days and it's in infancy, right? Yep. The UK's regulators, the PRA, they decided that some 1,500 firms in the UK need to do something climate by the end of the year. So that was good and bad at the same time, because now I'm speaking to some of the smaller building societies. It's like, we ticked the box, we're good now, right? We don't have to do anything about it. But that wasn't the point. The point was that you set the strategy at the board level, you do your first level assessment, and now you start integrating that into your underwriting, your scenario analysis, your portfolio management, your operational risk, your reputational risk, and then going on to all legal, operational, and so on and so on. So that's been a great achievement, but not as good. And think about that was just the UK alone, right? So we know that Hong Kong and Singapore broadly caught up with the UK, but quite frankly, EBA and Europe are 1 year behind. ECB is just doing the top-down and bottom-up. So they've done the top-down, they're doing a bottom-up stress test, but it's much more simpler, and it's also for select banks, just like the UK. Fed, because of politics, and apologies I'm going to bring into it, they're 2 years behind at least, because the regulation on the financial services and physical and transition risk isn't going to come anytime soon, and that's still very much under the question mark. So that's the future on the client side. Now, what's needed? Faster regulation, that's kind of explainable. What's also needed is money in the budgets, which is quite difficult in the light of the looming recession, but also is the education. So I think the more and more the clients do understand, the easier our job it is to convince them that this is the solution that is quite likely. But it's also vice versa. We also want to understand how the clients operate and how it's needed, how it's used. For example, the only reason we added transition risk or energy efficiency ratings is that because the clients wanted it to, I actually expected they're going to do it themselves, but it just turned out they won't. So now we have transition risk on top of physical risk, whereas in fact, the whole of the job the past 2 years was about building physical risks.
I mean, I don't have much to add.
Also, maybe I'll just add, so also because I work for a large financial services company, I think also one of the challenges that we've seen is that, within a large organization, there's lots of pilot projects going on. So there's a very real world, normal doesn't have anything to do with spatial technology in any way, but it's just that simple challenge of this is new, and there's lots of kind of projects that often then compete, and then, you know, it's slow progress in terms of ensuring that ultimately, I guess, our organisation and organisations similar to ourselves, they want to work with maybe one or two providers and ensure that there's a consistent story in terms of their applications and uses. And that's, quite frankly, a bit of a challenge because there are so many different use cases. And I think the technology is such, as Adina's mentioned, that it does need to be calibrated and fine-tuned for a specific use. So maybe we're just still in those days of the market needs to potentially consolidate in some way. We certainly hope so. Yeah.
If I may add something, from an asset management perspective, I think what we are going to see, of course, is that companies scope a lot of traceability systems in place. They start to disclose more. But what I want really to see is that Geospatial doesn't become a transparency exercise in itself. So I think we really need to start challenging companies and ourselves as investors on the decisions that we are making with that information. So basically, when we talk with a company that says that has an amazing traceability system in place, the challenge really lies on the ways how they are engaging with their suppliers, the decisions that they are making, and also that they are not only tackling the direct supply chain, like that's the easy bit, but actually when you start to talk with companies about issues like deforestation, we realize that actually the scale of the indirect supply chain is really big. And I think we really need to put these questions on the table. So again, transparency in itself is not a goal, it's a means.
Super. So we've come to the end of our time here today, so thank you so much for sticking with us. I hope that you've all got nice drinks and dinners and homes to go home to. I just want to thank once again my whole panel, who have been fantastic at keeping to time and keeping us all entertained for this last session. So thanks so much.